Good morning, everyone. Anne-Marie here. Today is Wednesday, May the 3rd, and this is the Lilu Level Up with the futures market. And so what we are taking a look at today into the Fed meeting is a fair bit of sideways action. You know, a lot of us, we get caught up in these daily moves and we think to ourselves, oh my goodness, it's going to the moon. Oh my goodness, it's going to the basement. And so what we have to do is sort of step back a little bit and say, what's been happening over the last week, over the last month? And that's always going to keep us in a better framework in setting together our formations for the day. So, big thing is that we need to hold 41.32. If we lose that 41.32 and don't immediately recover it, we're going to be stepping back down into that 41.05 to 41.09 area. If any of you caught my new show called The Daily Edge, we actually were watching the chart when it began to take this turn. It was very, very nice, and it continued to move up into the end of the day. Today is also the FOMC release, and everyone is thinking that they're going to raise 25 basis points. We'll see the employment report, and we'll know from there. So from a price point perspective, we're actually trapped between 41.31 and 41.51 today. Whenever the Fed move comes, it's usually the wrong one. I saw a very funny video on Twitter this morning for that, but it's usually the wrong one. If you chase it, watch your levels. Trade level to level. We require tactical strength right now. It is all the tactician is going to win. Okay? So, where are we inside? Well, we're still inside of the prior week's range, even though we did get up above it. We're still inside the prior month's range, even though we did get above it. So, my suspicion is the bigger, broader market, the very big money, is sitting around saying to themselves, hold the phone, we know something's going to shake out. We don't know how it's going to shake out, but for right now, we're just going to trade these ranges. And you can see that they did that for 1, 2, 3, 4, 5 months in the ES. And now we're getting into a new range, and we might be doing that for 1, 2, 3, 4, 5 months. I have no idea, okay? We might fall off a cliff. We might go to the moon. It doesn't matter. What we want to know is, where do we go next and how do we position? And so my suspicion, based on the positive price flow here and the positive price flow here, is that if we come in and hold the close of the prior day, we're going to have buyers come in. The moment that we lose it, the buyers are going to get more nervous, and it's going to bring sellers in. Those sellers are going to say, all right, I'm going to see if I can push it down into this area. And you know what we do is we just follow the guys that have the biggest pockets. I mean, that's as easy as it gets, right? This isn't the place to go champion the underdog. We're not going to win if we champion the underdog in here. We have to go with the biggest movers. So let's take a look at the Qs. Did a little bit of the same thing, right? Now we're in a brand new range, still inside last month's range, though we did get above it a little bit. Still in last week's range, though we did get above it a little bit. Today, holding the floor, right? That floor is now lower. I think that's an important thing for us to discuss, that this floor is actually lower. But we want to make sure that we do hold this close of the prior day. If we lose it, notice what happened. We gapped down and then immediately began to hold up. So if we move up and then stall out up above here at the 13,228 level, this is where we're trapped. 13,169, 13,228. We get above there, buyers are going to get very excited. Sellers are going to go, I got to get out of here, and that's going to push price action higher. Losing this level, We're going to say, all right, let's see what happens when it gets there. Go to a smaller time frame, watch for the topping formation, the failure to head higher, and then watch the breakdown, right? We can step through these spaces and it can move in a hurry, folks. If you haven't traded the FOMC, which I don't like to trade in general because it's a shredder for the brain and the account on occasion. So let's take a look at these guys. Same thing, but the sideways action for the month here. 1, 2, 3, 4, 5, 6, 7 months in the same range with the YM. A lot of foreign investment comes into the US through the Dow, and these are the Dow futures, and we can see them, you know, they're holding this range inside of the prior month. Still inside the prior week, but I mean below the open of that prior week. So we've got some weakness showing here. My thought is, hey, let's take a look at this chart, see how it goes from holding the edge, which is the close of the prior day. If it holds it, good shape. Or if it holds it, loses it a little bit, bounces and holds it, good shape. You can take the long up into the resistance. I think we're caught between 33,747 and 34,140. Note the other levels there for yourself. You know, listen, trading level to level, it's just the only way to go right now. All right, let's take a look at the RTY. Don't want this video to get too long. This one, I have the profile sitting in here, and you know, this one's a train wreck, especially after PacWest. Yeah, that bank, you know, we've got problems, and it's made because of the interest rate. That's a big, long, wonky topic. I'd love to invite somebody smart to talk to us about it, but you know, we've probably heard 1,000 things. Directionally, it would just be nice to see plumbing, right? So maybe I'll try and find someone to give us some plumbing stuff and do an interview with them. All right, so here we go. Where are we? Above the close of the prior day. That's going to be the line in the sand. If we lose this edge, 1737, we're going to start walking down the edges. And notice, yesterday, it lost this 1731 and faded really nicely, but almost immediately began to lift as it came up. And that's really, you know, we want to watch for that. We want to watch for the reversal areas where selling simply dries up and the buyers go, we'll take it from here. All right. And that's what we're looking there. 1756, the top end of the range in my mind. It could go to 1772, but these guys are in a lot of trouble. My thought, anyway. Let's take a look at oil very quickly. This is super interesting, folks. I'm not really sure what's happening here. We don't have enough fuels. Something's amiss, but whatever the case is, you better not be trying to buy anything long, simply because everything is short. Right? Now we're at the bottom of a very big range from a weekly perspective. We've touched this area several months, 1, 2, 3, 4, 5, 6 months ago. We moved through this area over and over again. 3 months ago, we faded, came down into 65, and then immediately turned around, right? Let's see what's going on here. Moving down, sideways, 64 here. 69 could be a buy zone, but here's the thing. If you want to look for a buy zone, you're going to have to look for a rounding formation where traders stop selling off. Oh, look at that. They stop selling off the range. They bump into resistance. They pull back, and then they hold support. And that's what we're looking for today. To me, that looks like about, hey, if we can hold the floor at 69.40 or so, let's make that a little bit lower to give us some juice. Yeah, 69.40. If we can hold that, we've got ourselves a ride back up to the upside. I like it. Last thing, gold. These are my favorites to trade. Gold running off the rails again. This is super interesting. I really thought we could come down to 1950. That's where I wanted to pick it up. It held the low of the prior week and then immediately began to rally. Take a look at this bottoming formation here that tells us it's time to go. See these wicks? Buyers, 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 buyers. Sellers still here. But as long as you don't break the floor, folks, you're going to be in great shape. Today, we've gapped up again. I still think this is really a move that needs to be checked. I don't expect a grand expansion. Here's the thing, if we move up into the 2027 area and breach forward, it is running people out of the woods who've been short. And so that's really what you want to pay attention to. I think this chart's still range bound. I think we're still close to the top of any motion. I expect a fade, and I'm doing that because of what I think the weekly formations are telling us. Weekly formations are telling us sideways action. All right, that's it. Thanks so much, and I'll see you all soon. This has been the Lilu Level Up.